Yesterday, I talked to everyone here and we were discussing the bear flag that was forming on the day. I tried to let everyone know going into this that we were in fact looking for more downside. And if you remember, and I recommend looking back at yesterday's video, look exactly where we tested. I'm going to get rid of this so you can see right towards that area of resistance. I let everyone know, I said, I don't really believe this was the main resistance. I was still believing the 12.65 to 12.69 area was our resistance going back to the previous highs we had back in July. But as we look, a perfect rejection, and what happened, we came right down towards our next key level. I'm going to tell you what's going to happen next and what I am looking for in the market, and hopefully you can learn from this as well from an educational standpoint. Before we get into that, to ask you to consider doing two things: liking and subscribing. Every single day I'm giving you the videos about the market, what to expect with news and fundamentals as well, going over everything completely transparent, winners and losers. Now that leads me to one more thing before we get into anything else. I also want to highlight some of the trades we took on the day, and I actually posted these on Twitter if you're interested. We're going to get back to this here in a second, but I like to start the videos off with this just so you can see what I did throughout the day, winning and losing, and hopefully you can learn from this as well. As we come in, I basically took two trades. There was the Tesla trade, and then there was the Amazon trade. Amazon was a loser, about 10% roughly, and then Tesla ended up going crazy, absolutely making us the bag. We're going to break those down as well here in the video. So let's get right into this. As we're looking at this, you're seeing a lot of downside here. Going into yesterday, I talked a lot about volume and what I was seeing there. That's where I want to start this video off. Look at the volume on the past 3 trading days. As we zoom in, you can see on this left-hand side. I like to use Yahoo Finance because it's really simple to use. It updates pretty frequently throughout the day. But if you want to use something better, I recommend Thinkorswim because their platform updates very quickly and you can see it as it's coming in. So it's a very helpful tool when you're actually trading. So when we're looking, Friday, you had 102 million, very important day. You had a decent day yesterday, but I talked about you get a bulk of this volume in the beginning of the day. Once you fill the gap, I told you this is why I was bearish. Once you fill the gap on SPY, we'll talk about it here in a second. Volume stalled, buyers stopped buying. Today, you had good volume essentially the whole entire day, beating that 30-day average of around 63 million traded. So this is good. This is good volume on the past 3 days. It's actually going up. Congratulations. Good market to be trading right now. So going into this overall areas on Nasdaq, this is what I'll cover first, and then we'll break it down into expectations, right? Going over this, as we see here, this is our key area. What does this come back to? The key levels back in June, the June highs, and the mid-July highs as well, okay? That's what we're looking at here. You had your big highs here before you had the nice breakout going into August, but these were your mid highs going on right now. And this is going to be a major level for Nasdaq, and I'm going to go into the SPY as well. But you can see you came right towards the tip, and as you line this back up, where does it line up with? Boom, right here. That's the exact top, almost to a T, and that's where you bounced. Again, we told you yesterday, so you had the chance to look at this, and you get the perfect setup, and you get the perfect entry point. Now, it's come to my attention, there's a lot of people that want to see this channel fail. There's a lot of people that keep commenting, a lot of hate here. This is in no way financial advice. This is just me giving out overall projections on the market and what I'm looking at. And hopefully you can learn from this as well based on the patterns and based on the price action. That's all you need to be looking at the market. Before you start trading any of your stocks, always come back down to futures, because at the end of the day, the market is going to follow futures. Okay, so Tesla, Amazon, all of those, the ones we mentioned yesterday in the trading day, they all followed what futures were doing. Okay, so as we look at this, boom, you came down. Now, I want to talk about where we're at now. Projections into tomorrow and how we're going to move. I still am bearish on the market. I have to be looking at downside pressure. Again, where does that flip? If you get above 12.8 here, that's where I flip back towards a bullish narrative right here. You can get above this area, that's where I'm bullish. As long as you're below that, you have to operate in a bearish manner, and you have to bet on sellers pushing you down, okay? So that's what I want to focus on. As well, before you end up projections, what is the White House saying? The White House spokesperson, John Pierre, the White House anticipates job growth to slow slightly. We know when the White House starts saying something negative about the market, it's probably a little bit more to it. Okay, now I'm going to go into some of the fundamentals in a second, but I want to show you the overall outlook before we get into that and exactly why. So I could see some bounce coming in here, okay? I could see us getting some love. I could see that happening. But where the resistance is going to probably start to form is going to be around this area right here. And you're already getting there around 12.4 to 12.43. That's going to be a major area because you were held it for so long and now you're stuck beneath it. So what am I looking for as we go into about the 15 and 5 minute chart? I'd be looking for any type of retest of this range. The real question is going to be can you get back above it? You've already been rejected once. The question now is when you retest it again, do you get rejected back down or can you get some love to get back to the upside? I'm betting on downside. However, right now I am liquid. All I have is my natural gas positions. Everything else, I'm staying out of the market overnight. I like to trade during the day and be able to control where my money is going in and going out. I don't like to have to be stuck in these positions right now. So looking at this as well, if you're looking at it from a short perspective, unless you're already in positions, the short side is kind of minimal. Why? Because all of this area is range trading and a lot of support. I suspect buyers are going to want to hold you in this area. And the question is why? Again, if you come back out and you look where you've been trading, look at how they held you in this range before. I don't think it's going to give up easy. Just like 12.4 did not give up easy, okay? So that's what we're looking at here. We're looking to see how we range trade in here. If you start to break below 12.06, 12.05, and 12,000 locally, again, you're looking for a major push back towards the downside. But 12.2 through 12.1 basically is a very tough level. Remember, we traded it on the breakout, but we know it wasn't an easy level to break. So that's what we're looking at right now. How do we respect this area? Can we get it back above 12.4? If you get above 12.4, you have room to try to trade this towards the upside if you want, towards 12.6, towards 12.6.5. That's where I'd be looking at. Now, when we go to ES, things are a little bit clearer. This is the SP500 futures, not the Nasdaq. What's happening here? A lot more clear. That 4,000 level, we remember, again, we go to the 4-hour chart, what happened here. If you come back in, this was your key level. This is you got rejected, you came back down, got above, mounted, and the rest was history. You went full bull after that. Again, you are now below that area. If you're trading underneath 4,000, you are very, very bearish. So I'm looking for downside into this level of around 39.40 all the way down to 39.20. This is going to be a very big level equivalent to the Nasdaq. So I still see downside on ES in comparison towards the Nasdaq. Looking at SPY, giving you this overall area as well. I told you yesterday, a lot of money I'd be betting on towards the test of 400. What happened? Everyone was trying to hate. They were saying we're pumping in the after hours, this and that, trying to bring down the channel. But guys, I thank all of you that continue to support the channel and stick with me, even through some of the bad projections or whatever it may be. Thank you for sticking with me. Your loyalty is appreciated. You are the reason I continue to do this and provide free content every single day for you guys. But look what happens. You come up, that 405 rejected, filled that gap yesterday. The rest, boom, it's history. Straight down. You come, and now you're operating below 400. You even get that retest. So I'm looking here, and I'm looking for a retest of 31 or 391 down to 390. Highly likely, but where'd you bounce? You can come back. It's that low back in mid-June. It's actually, your high in about mid-June before that big dip started to happen. So if I'm looking here, I'm watching all these key levels for minuscule bounces, but nonetheless, I still think we're targeting the area of locally 392 to 390 in the near-term future as well here on SPY. That's what I like the most here. Now, I'm not going to be going over specific overall stocks today. Today's a little bit different because I'm just not too heavily interested in shorting into tomorrow unless the opportunity presents itself. I'm not going to force plays. That's just not what I'm about here. But I want to highlight a chart that we've mentioned quite a bit here. This is the Big Six. So basically, if you're on TradingView and you have a premium membership, again, I'm not subscribed to them, but you can check them out. You can basically make your own little ETFs. And all you do is you just type in Apple, or we'll say Apple and the plus sign and then whatever stocks, and you push enter and it just lumps them all together. So this is the Big Six. You got Apple, Microsoft, Nvidia, Google, Amazon, Tesla. That's it. So basically, it just shows you how they're all moving connected, right? From this level, remember down here, everyone we were talking about, I was like, I'm feeling real bullish. I think you have a chance to break out. This was our bull case, right? Remember on the market, go watch the previous videos. You broke out, retested, boom, you shot up, bump and run. Now look what's happening. You're breaking back down. It's a clear head and shoulders in tangent with what's happening to SPY. It's in tangent. Perfect head and shoulders forming. You're breaking back down. But where are you testing? We zoom back out. You can see your key level back here. February 2021 double top. You're bouncing right at that level as well. So you're having your big stocks start to tank. That's important to know. As we look at these as well, Look how close, and look how you can't chalk this up to just luck or coincidence, because you're operating at the same levels that we've been operating for quite a bit of time now. So I'm looking to see if bulls are going to be able to hold you up. So far they have, but when you come down to some of these stocks, such as Nvidia, look at what's happening. You're dangerously close back towards those lows. Okay. Meta, dangerously close back to your lows that you had back in July. You're getting there. Microsoft, it's working its way there. It's about midway, but this thing could easily start falling off the cliff as well. Apple obviously holding up the best. That's why if I'm looking at Apple, I'm not even trying to touch shorts on it, because it's the strongest stock in the market. You don't want to short the strongest stocks. You want to try to short weak stocks. That's why today Tesla was a play. If you watched yesterday's video, remember what we said. You break 279, it's a wrap. That's when you're going full bear. What happened today? Let's say you just thought about that, and that's all you thought about today. Is I just wanted to look and see if Tesla breaks 279, I might consider going short. You broke right here. What happens? You break 279, and it's an instant drop within the next, give or take, 40 minutes from 279 all the way down to 272, 273. Boom, instant 100% if you traded that. Congratulations, whoever did. Again, this is all for educational purposes and to show you exactly how I'm looking at the market and how I'm picking plays as well. So hopefully you're getting something out of this. I don't want it to just be you come here to try to grab a play. I'm trying to show you exactly what I'm doing, and it's all absolutely free here. Now, Discord, if you want to get into that, if you want to see us every day and talk to us and be in the live chat, be in the voice chat, you can. The link is down below. But again, if you want to just get the free stuff, this is tons of free options as well. I'm trying to give you everything that I can here on the channel and be the best source for stock information. Now, going into tomorrow, looking at the data that we got today, we had job openings today. This was very important. As we come in, the higher this number, the worse, right? JOLTS job openings. As jobs are opening, they increased almost 10% more job openings. That's bad. Going into tomorrow, guess what's happening? We go into, sorry, let me go to the next one right here. You can see ADP non-farm role employment change. Important. We expect data to be bad here. Why? Because look at what's happening from the White House. If they're shedding light on this, they're trying to calm the fire before data is released. They're trying to tell you inflation's handled. But let me tell you, in my opinion, none of it is. As we go back to some of these fundamentals, J&K, what's happened? Again, boom. Getting killed here, shot back down, trending sideways, but you still got shot down. If we go back over to DXY, what's happening here? Trending sideways, getting ready to explode back up. You are literally right there towards, I believe, like 10-year highs, something absolutely crazy. The dollar's going bonkers here. Everything else is getting shredded. As we look here as well, someone asked in the comments down below about this ticker in specific. Again, all you do on TradingView, US 10-year, whatever your ticker is, and you can actually divide it so you can actually see if they're inverting, right? So divided by the 30-year. This shows you an inversion chart. How close are you to being fully inverted? Right here, 96% on the side. As you can see, yields still pumping, still trying to invert. This is one of the best charts if you want to see if we are still looking towards a recession, still looking for more downside. This is the chart. You've been following this since the beginning of the COVID crash, people. And if you go back, you can see it's the same thing over and over and over and over. Dot-com bubble, housing bubble, 2018, pretty close to a recession, but we handled it very quickly. But that's why this is so bad right now. And look, you're back to those levels and you've been trending in these areas. And if you go back to all these besides 2018, how long do you usually trend here? It usually lasts for some time. Here for 06 all the way to August 07. Right here, January 2000 all the way till August, about 6 months in that time period. So I'm just saying it's getting serious. And in my opinion, these charts are nothing to be ignored. Keep them on your watch list. But if you're looking here, I think tomorrow is all about being conservative. You need to recognize it's the last day of the month. And you also have an important options day coming up on the 1st, which is going to, or sorry, the 2nd. That's also going to be an important day as well. Next month is the OPEX, so you need to be watching out for that as well. So tomorrow, I'm going more conservative. I'm just waiting on this market. I'm going to let it trade. I'm going to let it do its thing because guess what? We just got our test of our key level. And what do we expect when you test your key level? We expect to bounce. You never set a target on a stock. I'm not going to just set a target on, for instance, the Nasdaq. Watch us go up and then expect it to just keep going, right? Because my target should be where I expect us to get resistance at all times. So when you come here and you're looking at these levels, they're all expecting to get resistance, people. That's what I expect. That's why that was my target right here on Nasdaq. You got rejected, you dumped. It was as easy as that. Wipe your hands, move on to the next trade, get ready for the stock market. Again, I recommend just being slow right here. Not financial advice, but let the market do what it's got to do, set up again, and be prepared to take your next opportunity. That's the focal point here. You want to wait, let trades come to you. Do not run towards the trades.